Hello and welcome back to Understanding Crypto. My name is Herve, and every other day on this channel I try to bring you crypto in the easiest way possible on the internet. I cover things like predictive analysis, research and tutorials to help provide you with the information you need to navigate your way in these crypto markets. So if that's the type of content you find interesting, be sure to click that like button and subscribe to the channel with your notifications on so that you don't get to miss any other value-packed video like this one. With that said and done, let's just jump right into this video. So this video is about a modular blockchain project DYM, which I found interesting. And for us to understand this DYM, we have to go back as far as understanding what a blockchain is in the first place. So a blockchain is like a digital ledger or record-keeping system that stores information across a network of computers. This information is stored in blocks, and each block is linked to the one before it, forming a chain. Hence, blockchain. Once data is recorded in a block, it's very hard to change or delete because every block contains a unique code called a cryptographic hash, which is basically like a digital fingerprint. This does not only make blockchain secure and transparent because, well, everybody in the network can see the information, but it's also protected from tampering. For example, imagine a blockchain for tracking ownership of digital art. Each time someone buys or sells a piece of digital art, that transaction is recorded as a new block in the blockchain. The chain of blocks shows the entire history of ownership for each piece of art, making it easy to verify who owns what and when they acquired it. This helps prevent fraud and ensures transparency in the art market. So you'd find it crazy that governments don't really use blockchains. Well, because they don't want us to see what they are doing, and by what they are doing, we're talking about them printing money anytime they like. Anyway, jokes aside. Now, traditional blockchains are typically built as monolithic systems where all components are tightly integrated into a single structure. This means any changes or upgrades to the blockchain requires modification to the entire system, making it less flexible and less scalable. Modular blockchains, on the other hand, are designed with a more flexible and customizable approach. They break down the blockchain network into independent modules or components that can be modified, added, or removed without affecting the entire system. Each module serves a specific function, such as transaction processing, consensus mechanisms, or smart contract execution. So we see that modular blockchains basically provide a more adaptable and scalable framework compared to traditional monolithic blockchains, making them well suitable for diverse application needs and evolving technological requirements. Emphasis on technological requirements because, well, we are advancing into the future and these types of blockchains are more customizable. So basically, they may be the future of blockchain technology. You might be like, yeah, what the hell is Dymension? Dymension is a decentralized blockchain platform built on the Cosmos SDK. It's about making it easy for developers to quickly set up their own mini blockchains called roll apps. The project was founded in 2022 by Yishay Harrell. I don't know if it's Yishay Harrell or Yishay Harrell, who is the founder and CEO of Dymension, and he does have a background in computer science from Lakeman University. Dymension's network architecture operates on a modular framework aimed at optimizing scalability, efficiency, and performance. At its core are modular blockchains referred to as roll apps. These roll apps are the building blocks of the network and are powered by the central coordinating entity known as the Dymension Hub. This hub is responsible for managing both consensus and settlement processes within the ecosystem. What sets Dymension apart from traditional blockchains, and which you would know if you've been following along, is its approach to task delegation. Instead of consolidating all functions into a single layer, Dymension delegates specific components to external chains. By doing so, it enhances network performance, scalability, and overall efficiency. a bit more like how sharding works. I will leave my Ethereum roadmap video in the description if you're interested in understanding this deeper. I can't explain it again for the sake of time. The Dymension Hub plays a pivotal role in overseeing consensus and settlement functions. Initially, these are managed by the Dymension team, including the approval of rollups. However, the long-term vision is to transition to a permissionless system with the Dymension Hub acting as a decentralized router. Interoperability is another key aspect of Dymension's architecture. It leverages the Cosmos SDK to facilitate seamless communication and transactions between rollups and other blockchains. Additionally, the use of Tendermint Core ensures robust security and enables fast transactions across the network. Dymension employs a delegated proof-of-stake consensus mechanism. This is something you must have been wondering as we are covering an actual blockchain. You always have to look for what the consensus mechanism is, because that will tell you if it's sacrificing security, scalability, or decentralization in its blockchain trilemma. So in this delegated proof-of-stake consensus mechanism, validators are trusted with securing the network and processing transactions. Validators stake DYM coins to participate in the consensus process, effectively committing their resources to support the network's operations. Additionally, token holders have the option to delegate their tokens to validators, incentivizing network security and integrity. In a moment, you will understand how this could cause the token's price to increase. Validators receive rewards in the form of DYM coins for contributing to the network, ensuring active participation to securing the network and processing transactions effectively. Governance within the Dymension ecosystem is facilitated through DYM coin holders, who have voting rights to participate in decision-making processes such as network upgrades, policy changes, and resource allocation. The delegated proof-of-stake model, or DPoS, also promotes interoperability across different blockchain networks, with DYM coins serving as a means of payment for cross-chain data and asset transfers, thereby enhancing the ecosystem's interoperability. Moreover, Dymension integrates an automated market maker within its hub where DYM coins can be utilized. I will leave my video on liquidity pools in DeFi for you in the description. That will help you understand what an automated market maker is. Token holders or coin holders can contribute to liquidity pools, potentially earning rewards for providing liquidity and enabling efficient asset exchange and price discovery. Validators are subject to a 21-day unbounding period. This is very important because if there is no lockup period, like in our neighbor Cardano, then when the price goes up, validators can just unstake and come to sell on us. So a 21-day unbounding or say lockup period is very important. This lockup period ensures the security and stability of the network by preventing immediate unstaking of tokens after staking. DYM is the native coin of the Dymension blockchain. The project raised about $6.7 million in funding rounds with an ICO price of $4.50 per DYM token. The token operates on a dynamic tokenomics model aimed at ensuring a stable ecosystem, with a total supply capped at 1 billion tokens, no max supply by the way, of which 157 million tokens are in circulation. Initially set at 8%, the inflation rate of DYM tokens is subject to adjustment based on factors like staking activity within the Dymension ecosystem. Now, here is what we have to understand about this part. If the proportion of staked DYM falls below 67%, signaling low participation, the protocol gradually increases the inflation rate to a maximum of 10% to incentivize staking. Conversely, if the staking exceeds 67%, indicating high engagement, the inflation rate drastically decreases to a minimum of 1%, encouraging token holders to stake less and maintain liquidity. What's important to note about this is that if the inflation rate decreases as more holders stake, it will not only reduce the supply of DYM tokens in the market, but also decrease how many tokens are being introduced into circulation. These two factors combined can create upward pressure on the price of DYM coins as demand may outstrip supply, which basically will lead to potential price appreciation. This mechanism ensures a balanced supply and demand dynamics within the ecosystem, promoting sustainability and stability over time. Moving on to its charts, we can see that this thing has not had its run yet. As we said earlier, the ICO price was $4.50. So it is very close to its ICO price. So buying here, for example, I say for example because I'm not saying that you should go and buy, but buying here will mean that you are buying actually 15% away from its ICO price. So that's a good deal if you ask me. Yeah, if you're interested in this project, then this is where you should be accumulating it because it's very close to its ICO price. Now, how low could this thing go? I don't want to make these videos so long, so I just tell you what I have done already and I just show you. If you follow my predictive analysis videos, then you will know how I go about analyzing these things. But the idea is that this thing can go as low as that's $4.86 and even $3.85. So below ICO. Note that institutional investors, when they buy into altcoins or say when they buy at ICO, they're expecting a 10, a 20, a 50 to 100x or more even. So buying here should actually bring you 5 to 10x minimum. So the $4.86 zone, it can easily bottom there, but if price drops are to persist, then it will come as low as this zone right here, and that will be like a 25% move to the downside. From this level, it should bottom. Ideally, this should be its true bottom. If it is not its true bottom, then we are on our way for some type of market bloodbath or black swan event. Then in that case, this thing will go as low as $1. But so long as we are in a regular market correction, this should be its true bottom. That is the $3.86 zone. But the $4.86 level can easily be its bottom as well. So if I was thinking of buying this thing, I would actually be buying at current market price, which is $5.20, and I will most likely DCA if we drop as low as the $3.86 zone. The reason why I would not be DCAing if we drop as low as the $4.86 zone is because that's too close to my buying zone now, isn't it? That's like a 6% move to the downside. And if you're buying into any asset in crypto, you should be able to stomach a 10% move to the downside. That shouldn't be a problem to you. But anywhere from a 10 to 15 to 20 and potentially 25 to 30% moves to the downside, yeah, that should be a good zone to reload yourself on said asset if you are convinced that it is going to do well. Now, to the upside, this thing can go as high as the $14 zone and even as high as the $21 zone. On the DYM BTC chart, my analysis would suggest that it should be bottoming here. Note that bottoms does not mean the exact level, yeah? You don't need to catch the exact bottom like here. You don't need to catch the exact top right here like so. You only need the zone. The zone is all you need, yeah? So if you have a zone like so, and your idea is you will buy when it comes down here, and you buy and see it drop by 2-3%, that's okay. It should drop, yeah? I mean, it can't just go straight up. Sometimes I want to be that perfect, but, you know, yeah, I really shouldn't be. All you need is a zone to accumulate. Yeah, you don't need the exact bottom. And looking at this, there's a chance that this thing actually, you know, comes down as low as so, then comes back to the upside before taking off in this progression like so. So there's a chance that it actually breaks this support right here and goes to the downside before coming back to the upside like so. So that downside could extend as low as so and whatever, but this zone should be its bottom on the BTC chart according to my analysis, and it should have a progression that looks like so to the upside. Now, if you convert this figure right here, it will give you roughly $14. And in the USDT chart, you will find that the $14 zone with my analysis is actually the 2.618. So we could see this thing fluctuate to the downside and possibly come down as low as $4.86. Maybe it actually goes as low as $3.85. But that's pretty much it for DYM, folks. If you are holding DYM, or if you are planning on holding DYM, and you buy here and see it drop maybe another 10% or 15%, you might be discouraged and be like, oh, I bought and it dumped, you know. and that's what people say a lot in crypto. But when it does do something like so and takes off like so, well, those who did not buy will wish that they bought even here for it to go down and go back up. Yeah, that's usually how it is. If you look at things like near protocol, I mean, we bought near protocol somewhere around $1. And when it did take off, some people wished that they bought near at $2, at a double. Yeah, so when price dumps, people feel discouraged. When it does go to the upside, they wish that they bought the top before the dump and the rally. Same thing with Jup. I kept showing you that this thing is going to move up like so. And it's the exact same thing that we are seeing with Dim. Of course, there's no guarantee. I'm just analyzing and, providing you with an overview on a project. But the idea is that these structures usually will turn out to something that looks like so. And when this happens, you wish that you bought this exact top. Because even if you bought this top right here and it dumped by about 17%, well, most people will be like, oh, I lost. I started buying Jupe at 57 cents, even though I projected that it can go as low as 46 cents. Jupe went as low as 43 cents. But then when you look at this mammoth rally, you wish that you bought even here to have it dump and then take off like so. So that's basically what my analysis for DIM would suggest, folks. Yeah, I will be on the idea that this thing consolidates here and just takes off, or we can have again another dip that dips either to the $4.86 zone and 86-cent zone, or the $3.85 zone. So if you are buying right now, just have it in mind that it can go as low as this level right here. Of course, it will ultimately depend on what BTC will do, which is why I will be making my short Bitcoin update very soon. So if you are not subscribed to the channel already, do so now and click the like button if you did enjoy this video. I will see you in the next one, but until then, stay safe.